What's happening, YouTube? It's Simon466 Cards. So today we're going to talk about sports cards and speculation and volatility and compare that to the stock market. I know a lot of people think of sports cards as if they were a stock in a player, like the stock market for a player's performance. And I've said this many times and I'll continue to say this. Sports card market is not like the stock market. And there's one key difference that allows for over speculation and volatility in the sports card market because this thing doesn't exist. So I'm going to get into that. But first, let's do some quick look and quick deep dive into some quarterbacks. I'm on Card Ladder. This is over the last 3 months. We have a Desmond Ridder Silver Prism. Started out about $120 in October, went as high as $140. It is now, as of early January, $34. So it's gone down 3/4, 75% roughly, 75%. Not a lot of stocks that you'll see go down 75% in 3 months, right? And this is a Silver Prism PSA 10. That's basically like a key card for a quarterback. Similarly, Deshaun Watson. Cards were at 189, 173 here as of early October. I believe it was about close to $300 before the season started. It's now down to $80. So again, 80 compared to 173, it's down about 50%. There's some dips and valleys here, but it's been a pretty strong, like straight line downwards, right? Now let's look at Russell Wilson's 2012 Prism card. Starts off at 160, 150, goes down to 75, so down to 50%, goes back up to 140, so basically goes from 75 to 140, so it almost doubles in price, and then reaches that doubling in price up here, and then now is back down to $95. So we've basically done a half, then a double, and then that back down to like 2/3. And that is a lot of volatility. And that's 3 of the 32 starting quarterbacks in the NFL. That's almost 10% of the starting quarterbacks at the beginning of the season. If this was a stock market, that'd be like 10% of the stock market with this type of crazy volatility over the course of 3 months. That doesn't exist. Stocks are way less volatile. Having said that, there's obviously penny stocks and things like that are very volatile, can jump up and go to zero and all that kind of stuff. I understand that. But these are key cards of key players. Again, this is a Prism PSA 10 rookie card. This is a Silver Prism of Deshaun Watson, or I guess a base Prism, because 2017 there weren't any silvers. But you know what I mean, right? The key card has a big star here beside it, right? That says this card has been selected as the key card, right? It says it right there, this Desmond Ridder Silver Prism. Again, these are all key cards, flagship cards, and they're flying all over the place. Stocks don't do that, especially key stocks, like more blue chip stocks, right? Now, these clearly are not blue chip players, but the cards themselves are pretty important cards. And there's one reason why this volatility is happening, and it's because of over speculation. People are buying these cards before the season, in the off season, thinking they're going to go up when this guy plays well, and I'm going to buy this on that type of hope and speculation. And while there is definitely speculation in the stock market, a lot of that volatility and that speculation is tampered down. It's reduced because there's one key thing that exists in the stock market that does not exist in the sports card market that reduces volatility, it reduces over speculation, keeps it in check. And that is something that we've all heard of. You've definitely heard of it. It's a little thing called short selling. You can short sell in the stock market. You cannot short sell in the sports card market. And so the only thing someone can do is speculate upwards. You cannot speculate downwards. And that is a very important difference. And that is the one thing that's allowing for this over speculation, and that leads to crazy volatility in the sports card market. And here is, I'm on Investopedia. Feel free to read this on your own time, but positive impact of short selling. Short selling is sometimes portrayed as a negative force. However, it can strengthen markets and benefit investors in several key ways. Specifically, short selling facilitates efficient price discovery. So it's, not prices aren't going up and going down like you saw in that Russell Wilson chart. It improves liquidity and it promotes healthy skepticism among investors. And that is the most important one right there. Promotes healthy skepticism among investors. There is no way to be skeptical in sports cards other than to not buy a thing. If there was a way to short sell a sports card, I would be a very rich man, because there are so many cards that are clearly going to zero or something close to zero that it'd be like robbing a bank for me. But that doesn't exist. And that is the key difference. There's nothing to keep prices in check. There's no way to speculate against cards. There's only ways to speculate for cards. And that's the key difference. And that's the whole point of this video. Short selling exists in the stock market. It keeps things in check. And there's other things too, like options and futures and that type of thing, forwards. But that mechanism doesn't exist in sports cards. And that's the point of the video. That's why there's such volatility in the sports card market. And it will continue to be, and it will continue to be, and it will continue to be. And there's nothing you can really do about it other than avoid the cards that are prone to over speculation and as a result, volatility. Because to me, that's a losing battle. You're basically going up against the odds. You're betting against the casino. And that's the whole video. Just a nice short one, just telling you why short selling is a really important part of the stock market, and it doesn't exist in the sports card market. Would love to hear your thoughts on this video and this theory that I have. Let me know in the comments below what you think. Thank you as always for listening and watching, and I will talk to you all soon. Cheers.